Hello, hello. Welcome to another episode of Trigger Warning. With me today, as usual, I have got Gary Russell and Sammy Chon, founders of X Token. Hello, hello.
Hi,
Morning,
Janine.
Sammy.
Hi,
Good evening,
Gary.
Janine. Morning, everyone.
Nice having you guys here as usual. We've got some nice things to talk about today. Well, it's always interesting. I think part of what X Token offers is always trying to equip investors and trying to educate people how to make wise decisions with their money, learn how to work with money wisely. And part of that is just leading itself so well into this conversation where we want to talk about how to navigate the cryptocurrency market. Just some tips in terms of what do long-term investors do? What do short-term traders do? How should we be working with our crypto investments as we start investing more and more money into this cryptocurrency as it starts growing? So I'm just going to come straight to Gary. Gary, I know that you've got so much experience with different types of investments, and I can just imagine that the principles are the same. The principles of investment, whether it's with fiat currency, real estate, cryptocurrency, the principles are the same. So I would love for you to share your wisdom in how to, some tips and wisdom and insight in helping people to navigate how to invest wisely.
Okay, so it's like, who do we want to trigger first? Let's trigger the day traders first. If you're a day trader, I view it as gambling. Warren Buffett would tell you it's gambling. There's other people out there in the long game who would tell you it's gambling. If you're in and out, in and out, in and out, buy and sell, buy and sell, buy and sell. Even with some of the robots they make out there to do with there's tax implications. And so I'm a Texas Hold'em kind of guy. I like playing Texas Hold'em. But if I explain to a card person, a gambler, on how I play Texas Hold'em, they'd tell me I take all the fun out of it. Because we're going to play jacks or better. We're going to be in it for the long game. And you can be doing everything right, and someone else can just have a lucky day and always have a better set of cards than you. That's happened too. Rarely, but it happens. And there's nothing you can do to plan against it. So same thing in day trading. If you're in and out, you could read everything you want. There could just be a time when things turn against you. And if it does turn against you, how much of your portfolio did you have in that short-term gain? As opposed to a long-term trader who says, okay, I'm in this for the long haul. This isn't short money. I don't need it right now. I need it for the future. And that doesn't mean that once you buy something, you have diamond hands and you hold forever. We still got to watch the market and see what's going on. You could be a long-term trader. You could get into something and 3 days later pick up a news article that's a little obscure and realize that it's going to greatly affect your position of what you're in, and it's time for you to get out. Or you follow some of the powers that be who are in political office, who make a couple $100,000 a year but have a net worth that doesn't line up with how much they make, and you can follow and see what they buy and sell, because obviously they have information we don't. It's just my opinion. Just my opinion, but they have information we don't. And you may have just bought into one that they're getting out of. Maybe a good time to get out of it. But that's not a day trader. That's not a short-term mentality. So if you're always looking to protect the investment, and we can be in it for the long haul. And I always say, as soon as possible, depending on your position, can you get your cost basis back out? If you threw $5,000 into something and it's jumped to 15 grand, a safer play, probably pull your $5,000 back out, and you can let your 10 grand of house money ride in the deal for as long as you want on your long-term trade. I know there's a meme going around that Warren Buffett advised this to Bill Gates, and then there's some inflated numbers on how much he would be worth if he didn't listen to Bill Gates' advice. I get all that. I'm just saying, if you're gonna play the odds and try to protect yourself and your loved ones and your significant others and your employees and your partners and everything, it's probably a good idea to not have a gambler's mentality. And if you are going to have a gambler's mentality, then keep that to a few percent of your portfolio, or 5% or less, or 10, depending on how much money you have, and be disciplined on that. So if there are wild swings, it's in a small percentage of your stuff that doesn't affect anybody other than it, unless you're looking for that endorphin high, you can get it with a smaller percentage. So, and the hardest thing about what I just said is the discipline to do it, because it's not sexy. It's not sexy. Profit at the end of the day and moving it into something else is sexy, but the ride to get there is not as sexy as the volatility of a day trading.
Right. And I went through this same advisement and application of wisdom with Gary a couple of years ago, and the thought of, well, where's all the fun in it?
Mhm.
Or like it's not really gambling, right? Or like, hey, I got a stock tip, or I got some news about this crypto. The fact of the matter is, at the place in society that most normal people are, if you heard something, the people that heard it way before you have already made the right moves, right? And you're going to be late to the party. And also, the trading platforms that you're on, they're not going to honor your trades fast enough to allow you to really profit from it. If you think your trades on Robinhood are going to allow you to take advantage of, inside secret news, you're really delusional. You got lucky. And if your future portfolio, or if your ability to pay bills for your kids or whatever that is based on luck and emotion and feeling good, that's really scary. So I was able to, take that information. I got into some crypto, and it jumped up a lot, like 300%. Gary said, "Hey, you should take some of take your buy-in off the table," and actually did. And you know what that did? It gave me a lot of comfort. I wasn't always second guessing, what if I left it in? It could be worth more now. Instead, it was like, hey, take your profit off the table. And that's what I did. And then I had a lot less negative emotion, or a lot less pressure on that trade being successful. So that was some of the cool things that I learned as I talked with Gary about different things. And apply that wisdom, and take the gambling feeling out of it. And look, at the end of the longer term day, the positive emotion around making good financial decisions and having that profit allow me to take pressure off other things, that was fantastic. And I loved that feeling.
I like that idea of having discipline when we apply ourselves. It's almost like you have to go into investment in crypto as well, with that business mindset, Gary, of really long-term discipline, restraint. I have to make business type decisions of how I'm going to keep this money machine going, as opposed to just driving myself off the cliff. And
Right.
I also love the idea of pulling out that initial investment once you've made it, because then it's a win-win on all sides. Whatever is left, you can keep reinvesting, or maybe take some risks with that because it's extra. So I do love that idea. I mean, it really is about long-term investment. That is what we try to encourage people to do at Axe Token, right, Sammy? How does this relate back to Axe Token?
So when we started designing the token and the way the profit was going to be, in that other scenario where I needed to take my profit to kind of ensure my initial buy-in, I had to sell some of my token that I bought, right? So I had less than I bought. So when we were looking at how the passive income reflections are designed, it's designed in a way that you can keep getting paid in US dollar token or stable token and not reduce the amount of your Axe token. And that passive income, you keep pulling that off the table, it's great. And eventually that passive income will equal what you put in cash. Now it's essentially all of your Axe gains are profit. And so when we design the tokenomics, the way the passive income is set, once the daily volume continues to grow and be steady, it's our goal that everybody has their buy-in out in cash. And then they just keep. So, but if you want to take a little bit of profit, there's some calculations that you can make and be like, hey, I put in $1,000 and the token's done really well up to this point. I want to take 1,000 out. There's a way for you to calculate that and look at your scenarios and go, and what does that look like going forward? And so really making not emotion-based decisions, but logical decisions, right? And it's impossible for me to ask everybody not to make emotional decisions. There's an emotional decision, and then it's confirmed by logic, right? So we bring you the logic part of this, but then we also need to search ourselves and make sure that the emotional part, is it like so crazy? Like, one time I bought something, I lost on it, then I bought something else, and the second thing that I bought, I was hoping it was going to make so much money to offset my bad decision from previous. That's an emotional trading decision that puts too much pressure on the second trade, right? And so I needed to examine that and go, look, if I lost on a trade, I write it off and I learn from it. And I try to make smarter decisions going forward. But I can't expect trades to fix all the mistakes of the past. And we can't do that in relationships. We can't do that with our investments. We can't do that with real estate. If you're still moaning and groaning about the real estate that you lost out on in 2008, and you're still trying to fix that in 2023, you're going to have major judgment issues and blind spots, and you're going to make another mistake. And unfortunately, look, we're emotional beings. We're human beings. We have emotion. We're not Spock. We're not Vulcans. We're not 100% logic. Well, Spock wasn't even 100% Vulcan, right? And that's such an important thing, is why we want you to get involved with Axe Token, Axe Community, understanding more and more about financial wisdom, and go, you know what, this principle makes sense in my life, either because I didn't follow it and I remember the pain, or this principle makes sense because I've done it in the past and it served me well until this point. So, yeah.
Yes, that thing of being a gambler, getting that expecting the cryptocurrency or the investment to save you. It's that desperation where you're putting your hope into a little token somewhere to change your situation. I do, and I know that we also do encourage people to make wise decisions, but also educate yourself. Take your time. I know I've heard both of you several times say, start small, take your time. Don't invest money that you don't have or that's your life savings, Just take your time and work slowly and diligently and with discipline, and then you can't really go wrong. On that though, and I don't know who's going to answer me, Gary or Sammy, when somebody is going with that approach of more long term, I want to have this grow, I wanted to build, I wanted to make more money as the time goes by. How do we read when, how do I know when to take some out or when to not? Because the other point of the other side of the coin is the next Bitcoin, the next thing that's gonna just explode and get so big. So many people don't want to miss out on those opportunities. So when we have invested and we're ready to hold, how do we read the markets when we get to that point of growth?
Well, Sammy hit the nail on the head with a basic principle. If you're going to invest in something, it has to stand on its own without outside pressure. You can't bring past baggage into the new deal. If you're broke and you need money, don't start a business. Go get a job. The business needs itself to do what it's got to do. It can't handle the baggage. Your new investment you're in now isn't responsible, and it shouldn't handle the stuff of the past. It should just be on its own. So once you're in the frame of mind of this thing is this thing, it doesn't need to do more than it's supposed to. It just needs to do what it's supposed to do. And I don't need it to make up for past mistakes and failures. It puts you in a clear position. And then when and that's the advice I gave Sam a couple of years ago. If you're there, why don't you just get your cost basis out as quick as you can and leave the profit in and let it roll? Because then you can monitor it, but you don't have the internal stress of what if there is no more baggage to carry to the next one. And you got your profit back in hand. And guess what? You're in the market and you're looking for an opportunity that can stand on its own, That doesn't have to make up for other stuff. It's not here to pay the bills. You don't have something coming around the corner that's due, and that in and of itself would just put you and if you've never done that before, it's going to put you in a proper headspace of how to look at things. And then you'll understand why some people say no to opportunities. Typically, folk with money who've made money will say no to an opportunity that you say yes to, and you can't figure out why. You're in desperation mode and you need to make $1. They're not in desperation mode. They don't need to make $1. They'll take under market rent because they have plenty of money, because the tenant's happy and they stay there forever, and it's not a headache. There's things that money will afford you to do to lessen the burdens of a lifestyle.
Makes sense. Sammy, did you want to add anything?
No, I think Gary really, said it well, and there's opportunities. There's making calculations. You're looking at freedom. You're looking at amount of attention put on something or stress, and you got to have all those things in there, and you got to start to know yourself, and build guardrails around things if you know that those things haven't gone well for you in the past, or you got to make sure you learn from the mistakes. There's so many things involved with investments, and investments are what they are. There is a chance of any investment going to zero, and that's a reality. So the main thing is you don't put 100% of all your money into one investment. You spread it out. You learn how to do those things. So there's really important stuff there.
I love the fact that part of X Token is to help people with financial training, learning about just some from the basics, how to budget, how to work with some of the basics of money, and then going all the way into higher level investments and higher level money questions and issues as they arise. So if you are interested in finding out more about X Token, go and look at the website at www.xtoken.com. And you will see, as you get to know us better, that Gary and Sammy do practice what they preach. They have learned through the hard way I think, Gary, you've even spoken in the past of having that desperate mindset, expecting things to bring a higher return and then losing that money. Any investment is risky, so you do want to go soberly into that investment, knowing what you can and cannot expect of it. So any last words of wisdom?
Just patient and do your best to make an unemotional decision. So the thing can, like Sammy said, we're not Spock. I think maybe the only person who is Elon Musk. So just a patient, as unemotional as you best can decision on itself, and don't bring extra stuff into it.
Yeah.
Okay. We do have a question from a viewer today, and this question is just knowing what is the minimum that I can invest in X Token? Do we have minimums, Sammy?
No, there are no minimums. It's just that
say like $1. I mean, we more than zero.
Yeah. Now, once the buy sell exchange is open and we're on the market, you'll be able to purchase in any increment that you like. But because the purchase price right now, as of April 2023, is so good, the real question is, how much can you afford without needing it to pay your bills next month? And that's really a more fair way to look at it. You say, hey, what's the minimum I can buy? My thing is, what's the minimum you can go without for the next 30, 60, 90 days to see it make some growth? And so that's kind of how I position that question. And so,
because some people do want to come and just feel out what is it about, but if you do have more, like you said, if you do have some money that's not gonna be used to pay your bills, then put it in. You've got nothing to lose, and join us in the X community. So thank you for today. It was quick, to the point, and I look forward to seeing you guys next time. So thanks for watching. Remember to subscribe to our YouTube channel and go and check out the website at www.xtoken.com.
Thanks, everyone. Thanks, Janine. Thanks,
you.
Sammy.